Welcome to Electrified, it's your host Dylan Loomis. So first up, let's run through some reactions to Tesla's Q1. Trip Chowdhury has bumped up his Tesla price target from $1,500 to $2,300 per share, which is by far the highest on the street. I really don't know what to make of this guy still. I would say I applaud him for sticking his neck out, but he's effectively saying over the next 12 months, another $1.3 trillion in capital will flow into Tesla stock. Now look, I absolutely believe that it should, however, that does not mean that it will, given all of the macro constraints. And in his note, he just runs through things that we already know, and in a moment I'll show you all of the analysts' new price targets and how far ahead of the rest of the street Trip really is. Here we have Tony Sacconaghi at Bernstein with a price target of $450 per share. Now look, I don't care how good Gary Black says your modeling is, I think you're doing something wrong. I'll just say though, if Tesla stock price is $450 a year from now, I will be selling my house and all of my computer gear to buy more shares, so that will effectively be the end of my YouTube tenure. Philippe Houchois from Jefferies still at $12.50, but he brings up something that I want to expound upon. He said Tesla reported a drop in cost of goods sold per unit despite increases in the cost of raw materials as well as logistics inflation. With this data, we should all be wondering, how is Tesla pulling this off with all of the inflationary pressures and while ramping 2 new gigafactories? The good news, Zach Kirkhorn gave us some insight into exactly what Tesla is doing last night.
Note that commissioning costs for our factories are in R&D, as Berlin started production in late March and Austin in early April. These costs will be in automotive COGS going forward, given these factories are now producing customer sellable cars.
So what's going on here? As you just heard, Zach said Tesla is putting these commissioning costs for these new factories into the R&D bucket, and only after the factories start to sell customer vehicles, then will those factory costs show up in cost of goods sold. Simply put, this is Tesla aggressively putting plant costs into expenses, R&D, meaning some level of those expenses will not be amortized or depreciated. This strategy highlights Tesla's strong cash flow, as it means Tesla is expensing factory costs that many other automakers would actually capitalize over time. So we may see higher cost of goods sold in Q2, as Zach said, but the impact may not be nearly as harmful as I personally had thought, given that Tesla is now expensing these commissioning costs, although we don't know how big these are as a portion of the overall factory costs. There was something that Trip Chowdhury said that I've definitely thought for a long time. He said that Tesla is really the only company, and for a long time Tesla has been the only traditional equity that I've owned, and it's going to stay that way for a long time. There are plenty of reasons why, but I want to highlight what I deem to be Tesla magic and what they're really doing. So have a look. Tesla's revenue quarter over quarter grew, we'll just say 6%, and year over year, we'll say 80%. Now, if we scroll down and compare that revenue growth to Tesla's CapEx, or capital expenditure, basically how much money is Tesla spending to grow their revenue? Well, quarter over quarter, it shrunk 2.4%, and year over year, it was only up 30%. So what this means is Tesla is growing its revenues almost 3 times as fast as its capital expenditures are growing. So in the future, this is going to lead to Tesla having even stronger free cash flow generation, meaning they have plenty of runway to grow faster and to do essentially whatever they want to do. I cannot stress this enough, but this capital efficiency is like magic, especially in the automotive manufacturing space. It's just unheard of and never ceases to impress me. And one last quote from Morgan Stanley. They say it's not so much the strength of Tesla's first quarter that's impressive, but their gap to the competition. The more we see out of Tesla, the more we are concerned about the rest of the industry's ability to play catch up. It's funny because this is exactly what the retail Tesla fans have been saying now for years. And I have to add the question, what will Tesla look like when these supply chain and inflationary pressures subside and we enter somewhat of a normal environment? All I have to say, it's going to be absolutely awesome. And here you have it, a summary of all of the updated Tesla price targets. So go ahead and pause the screen or take a screenshot. And once again, just to point out, Trip Chowdhury almost $1,000 higher than the second highest price on the street. Real quick, I'd like to shout out Athletic Greens, the sponsor of today's video. If you've ever thought to yourself, I should be making healthier choices, honestly, this is a great place to start. I spent a few years in the health and wellness industry, and I can confidently say this is my favorite greens drink of them all. all, and I've had it every day dating back to last year when I first saw it in a Lex Friedman video. AG1 is quick and easy. 1 scoop in 8 ounces of water and your superfood cocktail is ready to enjoy. Every serving of AG1 has 75 vitamins, minerals, and probiotics that when taken consistently can support gut health, energy, immunity, recovery, and focus. AG1 is also independently certified by NSF. A few of you have actually reached out to me saying that you grabbed some AG1, telling me how much you enjoy it, which of course is great to hear, but honestly it doesn't come as a surprise. AG1 has also offered to provide a year's supply of vitamin D3, K2, and 5 AG1 travel packs for free with every new purchase if you use my link in the description below. So if you want quick and easy support for your health, this is an awesome option. Moving on, Simon Moore is the CEO of Benchmark Mineral Intelligence, a firm I have a lot of respect for, put out a tweet thread basically saying that Tesla was significantly understating how much lithium is actually in their batteries. It seems odd to me that, Elon, Drew, Zach would understate these figures. Either way, he said this: "I'm not saying Tesla is paying high prices, their long-term contracts will shelter them, but they are running out as Elon said. The next 2 years from Q4 this year onward, so into 23 and 24, it will start to badly impact Tesla, but other EV makers are in even more of a bind." However, have a quick listen to what Drew said last night because he was incredibly bullish about Tesla's prospects in this space.
It really depends on the resource. Some resources, like just getting rocks out of the ground, expanding the amount of rocks that you're getting out of the ground is, maybe a little bit of paperwork and some additional sort of blasting and trucking operations. The refining is maybe where there's, it's a little bit more chunky to bring it online, but also the refining it's not like an oil refinery. It's a much smaller operation to refine lithium out of spodumene or liquid. Like a brine or a salt pond evaporation. So, you're talking about a time scale of 1 to 2 years.
I think one of 3 things is going on here. 1, Tesla is downplaying the challenges and issues that it faces. I would say that's unlikely. 2, Tesla is using these comments to push the rest of the lithium industry to start producing more so that Tesla will keep going to them for new contracts, rather than Tesla moving more of this production in-house and losing Tesla's business. Or 3, Tesla really is just that confident in its abilities and its research in that space, and that they can do this in 1 to 2 years when the rest of the world has taken them 6 to 7. I would absolutely not be surprised. We just don't have a ton of data to go off of. For me, it's probably a blend of both 2 and 3. Either way, it's once again a Tesla playing chess while everyone else is playing checkers. Many people recently have been attacking Elon, saying he didn't found Tesla because he bought it. It's really just a game of semantics, but here's what you need to know to counter those arguments. He says it was a shell corp with no employees, no IP, no design, no prototype, literally nothing but a business plan to commercialize AC Propulsion's T0 car, which was introduced to me by JB Straubel, not Eberhard. Even the name Tesla Motors was owned by others. And potentially exciting news, Elon agreed to sit down with Tesla owner Silicon Valley to talk about the early days of Tesla to ultimately clear the air, and he said maybe JB would be up for that too. He deserves a lot of credit, as do many longtime Tesla people. The Boring Company just raised $675 million at a $5.7 billion valuation, and the Boring Company is hiring. This tweet from Elon is just insane. He says Tesla's OPEX, or operating expenses, are embarrassingly high in his opinion. Before I show you what they are and how they're trending, remember, for Tesla, they include not just expenses for the cars, but Optimus, FSD, 4680s, all of Tesla's energy products, and basically everything that Tesla has going on. To say that that number is high when in reality it's actually quite low is just wild. Here we have it. Tesla's operating expenses quarter over quarter were down 17%, and even year over year they were only up 14.5%, when most of Tesla's metrics are growing over 50%. However, the best way to contextualize this is a tweet from Matt Smith. Tesla had lower OPEX in Q1 than Rivian had in Q4, despite 375 times higher revenue. So Tesla generating almost 400 times the revenue of Rivian on less operating expenses. Gary Black said Wall Street's new non-GAAP earnings per share for Tesla this year, fiscal year 2022, have moved to $11.28. I'm showing you this because I think there's significant room for upside. If you just take Tesla's non-GAAP quarter one data and annualize that, multiply it by 4 quarters, that would already have us at $12.88. And I personally think Tesla's quarter 3 and quarter 4 this year could see significantly better EPS numbers, so just something to keep in mind. This Dan O'Dowd attacking Tesla FSD is completely out of control. He's essentially now running for Senate just to get some level of cover to essentially bash Tesla publicly. In an interview, O'Dowd vowed to not talk about anything except Tesla, and many people in his camp think he's merely running to imperil Tesla. And as I said, qualifying for the ballot and formally running affords him a higher degree of First Amendment protection for his loaded claims about Tesla and makes it far more likely TV stations will air his anti-Tesla spots the team produces. I won't spend any more time here as what he is doing is greasy, slimy, and honestly disgusting, but it'll be linked below if you want to read further. In case you missed it, wipers and seat warmers are back on the main screen, and yes, you can now have the seat warmers on with the HVAC controls off, so in the colder climates you can save more energy. No surprise here, but Tesla is second only to Disney when it comes to the brand value and the bond they have with customers. Tesla was the only automaker in the top 5, and the only other one in the top 10 was Mercedes, sitting in 6th. Nothing has been confirmed here, but the word on the street is that Panasonic is leaning toward Oklahoma to open up that multi-billion-dollar facility to build new batteries for Tesla. It was down to Kansas or Oklahoma, and now Oklahoma is basically working on a package of incentives to try to land the unnamed company that everybody thinks is Panasonic, so we'll wait and see what happens. The NEMA 1450 adapters have been sold out for a long time. At least for now, they're back in stock in case you've been looking. Tomorrow or next week, we're going to talk more about the dedicated robotaxi. I have all kinds of questions I want to throw out to you guys so we can start brainstorming what this vehicle might actually look like and how different will the interior actually be. Yesterday, I mentioned we dive into the CAFE standards, the corporate average fuel economy, because it resulted in Tesla getting an extra 288 million in regulatory credits. However, I found a video, I'll link it below if you don't want to wait. This is something we'll get into next week. The latest on the Elon and Twitter saga, it looks like he has funding lined up. Now, he may be responsible for around $21 billion of the purchase price. He probably only has around $3 billion in liquid cash, so how would he finance that gap? It's anybody's guess. I'm not ready to say he's going to sell Tesla shares because he does have myriad other options, but this is really the only thread I'm personally interested in following, if and when Elon will sell any of his Tesla stock to finance this deal. And last up for today, Rivian is really up against it, as many of the residents around the area where they're looking to build that new plant near Atlanta, they're not loving the idea due to environmental concerns. So they're gonna have plenty of hearings and there will be a lot of back and forth, much like Tesla experienced with Giga Berlin. That'll do it for today. Please like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.